Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 3rd of September 2020, though by the time this is published on YouTube, it will be Friday, the 4th of September in the United Kingdom and Europe, but still Thursday in the United States. Now, earlier today, we published a video entitled, "Should you buy more gold and silver before the US presidential election?" where we discussed gold, followed by silver, being really a poor indicator for predicting inflation, but probably will be a necessary and intelligent purchase before the US presidential elections, just in case there are some surprises. Now, in that, we pointed out that Wall Street stocks were attempting new highs, but warned this will not last, and we could see equity prices reverse and begin to fall before November is reached. Now, regular listeners to our channel may remember a video we published on the 10th of August entitled, "Will the Nasdaq lead the next stock market collapse?" where we envisaged that it is most likely that it will, and again probably prior to the US general election. Now, we have placed links to both of these videos at the top of the description box below. Now, interestingly, when we published today's video, US equity markets were predicted to be higher, but they've reversed course. And at their close today, the Dow is down 807 points or 2.8%. The S&P 500 is down 125 points or 3.5%, and the Nasdaq is down 598 points or just shy of 5%. Now, whilst we're not necessarily saying this is the start of the rout, though it could be, it is most definitely an early sign of what to expect prior to November. Now, interestingly, gold has fallen a further $6 since our earlier video and currently stands at $1,932, and silver has fallen considerably more percentage-wise and is now down to $26.60 compared with $27.24 earlier. Now, the purpose of this video, though, is to read to you an article we came across when this week's edition of Bloomberg Businessweek magazine arrived on our desks this afternoon. Now, we have to say we do not entirely agree with the article in full, but it is important sometimes to occasionally listen to or at least observe voices which may have a differing opinion to that which we sometimes take for granted. It's also a little light reading, to be fair, and we wanted to share this with you. This video will end at the conclusion of the article. So please, we ask you in advance, do share any thoughts you may have in the comment section below. Not forgetting, of course, hopefully, to subscribe if you haven't already done so. Give us a thumbs up. And if you can, to share our videos with friends, family, or anyone really who may have an interest. So let's go ahead and read to you the article, which is about 6 minutes long. Article in Bloomberg Businessweek, dated 31st of August 2020. Headline: Send gold, Bitcoin, and whiskey. Inflation may be low, but some investors are still hoarding stuff just in case it hits the fan. One lunchtime in 2009, as the US Federal Reserve started purchasing treasuries in the aftermath of the global financial crisis, Richard Hodges stepped out of his office to buy his first gold bar in the City of London. Over the next decade, he built up his personal collection to several kilograms worth, stored in his own little Bank of England basement. Hodges, who also works as a money manager at Nomura Asset Management, thinks central banks' stimulus has ushered in an age of currency and asset price manipulation. He's betting that physical, tangible gold could retain its value if all of that goes wrong and paper assets crumble. I even stack these little bars like they do in the movies, he says. Ever since the financial crisis, a chorus of investors and pundits has warned that near-zero interest rates and the Fed's bond buying would flood the economy with dollars, drive up consumer prices, and create market bubbles that were bound to burst. Yet inflation has been tamed for the past decade. Global equities have returned more than 150% with dividends, and long-term bonds doubled investors' money. Not even the pandemic and its recession have wiped out those gains. The spot price of gold has risen a total of less than 60% in 10 years. If the precious metal was a hedge, it was against a disaster that didn't come. Still, gold has seen a surge in demand lately. Hodges bought his most recent bar in May, and his timing could hardly have been better. 3 months later, the metal hit a record $2,064 an ounce, up from $1,700 at the start of May. It's currently around $1,920. Anxiety about inflation is once again in the air, particularly among individual investors. Even if the past decade of stimulus wasn't enough to conjure higher prices, the thinking goes the Fed's additional moves since the pandemic began may do the trick. Along with gold, people are stashing away Bitcoin and even whiskey as they search for hedges. It's not necessarily that investors think inflation will spike dramatically. Consumer prices in the United States rose just 1% for the 12 months ended in July, and bond prices imply that fixed income investors are looking for only a 1.7% annual rate over the next decade. One case for hedging is that inflation would only have to overshoot expectations a bit to shock the system. A rate of inflation at 3% is hardly hyperinflation, but 3% inflation per annum can erode your wealth by half in under 25 years, says Nikhil Chandra, Investment Director of Real Assets at Aviva Investors. He argues for income-producing investments such as real estate as a way to stay ahead of prices. Now, whether gold would provide the protection investors hope for is a more complicated question. Gold is an unreliable inflation hedge, says Campbell Harvey, a finance professor at Duke University. Harvey and his research colleagues have found that gold has held its value remarkably well since Roman times, yet it's prone to manias and crashes over shorter periods. Right now, on an inflation-adjusted basis, gold is expensive relative to its past prices. If it reverts to its long-term average, investors who joined the rally late could lose a lot of money. Cryptocurrency investors are driven by some of the same thinking as gold buyers. The way some digital tokens are designed to be limited in supply leads investors to hope they could hold their value if paper currencies fall. The price of one Bitcoin, the best-known cryptocurrency, is up roughly 60% this year to about $11,500. Gold, Bitcoin, both of them, I think, are protections just against this uncertainty that's out there, says Michael Novogratz, founder and chief executive officer of Galaxy Investment Partners. He has about a quarter of his net worth tied up in cryptocurrencies and related businesses. Similar to gold, says Novogratz, Bitcoin derives much of its value simply from people believing it's worth something. Neither asset produces income or earnings. What makes Bitcoin relatively more attractive to him is that it's still in its early adoption stages. But Bitcoin's more speculative than gold. Even after its price rise this year, it's down roughly 40% from its peak in 2017. Commercial property investor James Scott's new favourite asset is a lot more liquid. At least 4,000 litres of whisky in a warehouse in Scotland. He started collecting bottles 5 or 6 years ago, but has switched to casks. He recently sold a 20-year-old cask of Bunnahabhain from the island of Islay after it appreciated 10% in 11 months. Whisky certainly outperforms inflation in casks, Scott says, and a good tipple has one edge over purely financial assets. Whisky's got more soul, he says. And at the end of the day, if it doesn't work out as an investment, you can have a great party. Unquote, end of article. The bottom line of the article is that investors who are nervous about stimulus see it as a shelter, but gold is an unreliable inflation hedge in the short term, and looking expensive by some measures. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.